one fund. On point for today, the expert to talk about it. Welcome to the ETF of the Week. Yes, this is the ETF of the Week, where we get the latest take from Todd Rosenbluth, the head of research at VettaFi. And if you go to VettaFi.com, you'll find all the tools you need to be a savvier, smarter investor in ETFs and to get more details on the new, newsworthy, trending, and timely ETFs that we discuss here. Todd Rosenbluth, it's great to chat with you again.
It's my pleasure.
Your ETF of the Week is
the Avantis International Small Cap Value ETF, AVDV.
AVDV, the Avantis International Small Cap Value ETF. Small cap, well, we've been waiting for a small cap rally. International, we've been watching a big year in international, but there's some concern about how that might be changing and what's going on with tariffs. So what's your reasoning for this fund being ETF of the Week now?
So a couple of things caught my eye with this Avantis ETF. Through July, it was up more than 25% for the year. It's outperforming an all-country world small cap index. And it recently crossed the $10 billion mark. This is an actively managed ETF from a proven active manager for folks that want to have overseas exposure. We've talked mostly, when we've focused international investments this year, on the large cap space. I think we've often focused on the index space or some of the active products, but this is a small cap value fund. So Avantis has a strong record of small and value strategies. This one really caught my eye.
In terms of the international side of things, we should point out to people that we are recording this in advance to accommodate travel schedules, and we're just still getting to resolution on some of the tariff things. So this has been recorded more than a week before it is airing to our audience. But I'm curious, because if you're picking this knowing that we've got a little bit of a time lag, you've got to be convinced that we've seen much of the tariff impact, or that we're not going to have anything that is scary, like, okay, as we get some final adjustment here, right? So is part of the reason for international now that we're finally getting some clarity in your mind?
We are starting to get some clarity. The volatility seems to have slowed down. A number of initial trade deals have been announced by the time you and I were talking about it. But smaller companies tend to be more locally based. And so my understanding is the tariff impact is going to be greatest for companies that are shipping to the United States that have overseas revenue streams. So the smaller companies that you find within Canada or within France or within the United Kingdom, to name just some of the markets that you'd get exposure with through this ETF, the companies are not the ones you would normally know the names of. These are lesser known, more locally based companies that I think provide some insulation based on the volatility that's going on. And then the fact that this is a value slice, or this is a portfolio that's focusing on valuation, you're finding things that have likely pulled back in advance and that have, and according to management, have some opportunities to improve.
You frequently, when we talk about international ETFs, you're frequently banging the drum on investors going, you may not love diversification, but all the studies say domestic investors don't have enough international exposure. Well, if they don't have enough international exposure, they particularly don't have it for small caps. So for you, as part of that thinking, why this fund now? Because we have seen a big run on international. So folks have leaned in a little bit this year. But again, they've been leaning in the sweeter spots, not necessarily the small caps.
Correct. So when I think of what we see within U.S.-based investors' portfolios, their international exposure tends to be more, it's market cap weighted, exposure to the EFA, exposure to the FTSE-based strategies, where the largest companies, the Nestle's of the world, Nestle pops into my head as a large cap developed markets company. The smaller companies are underexposed, we find, within a portfolio, but yet $10 billion is now in this Avantis ETF. So it shows that when investors are turning to international small caps, this is one of the funds that they're focusing on. I think for good reason. The track record is appealing. It's relatively low cost also to get exposure to international small caps. Just 36 basis points is the fee.
As I was going to ask about expenses, again, 36 basis points, and we haven't really talked about management. This is actively managed. I mean, most investors, you said they wouldn't necessarily recognize the companies in here, but they wouldn't if they were looking at a small cap international index either. So this is active management that is making the calls on this.
That's correct. So this is actively managed. Just to level set a little bit, the portfolio has over 1,400 stocks. So it's owning the broad array of, or a broad array of international small cap companies. Avantis tends to have a favoring of companies that have attractive valuations, that are higher quality in terms of this, and have the stability of their operations, and yes, smaller size. So the active management is not heavy-handed. This is not a concentrated portfolio favoring a small pun intended, a few number of stocks in particular, but yet 1,400 of them well diversified across geographies and sectors.
What that also says is that maybe somebody needs to be considering what they are getting with this fund from the standpoint that we just were talking about. You know, hey, maybe you want to get your exposure to international small caps this way. Well, this with 1,400 actively managed, but 1,400 is much broader, therefore maybe likely to have a little bit less volatility than something that is concentrated. If somebody wants to add a little bit more juice in this space, might they want to be looking at something, or at least compare this before they invest to something that has a much smaller portfolio?
So yeah, you certainly want to see the other choices that are out there. International small cap and concentrated don't as easily go hand in hand together. They're from in the ETF wrapper. That might exist. I'm failing to think of one off the top of my head. Many people are underexposed to this space, and I think they should have more, or they should certainly be considering it. In the U.S., we tend to have a hefty weighting, or a reasonable weighting to small caps within our portfolios. I think many investors are missing out. This is a great fund to get diversified exposure, and the active management has been adding value based on its track record. I believe this actually is a 4-star Morningstar rated fund the last time I looked.
It is indeed a 4-star fund. And again, what they'd be missing out on, well, this year, fund up about 27% through July. It's the Avantis International Small Cap Value ETF, AVDV, the ETF of the week from Todd Rosenbluth at VettaFi. Todd, happy travels. We'll see you again next week.
Thanks a lot.
The ETF of the week is a joint production of VettaFi and Moneylife with Chuck Jaffe. I'm Chuck Jaffe, and I'd love it if you would check out my hour-long weekday podcast by going to MoneyLifeShow.com or by searching for it wherever you find your favorite podcasts. Now, if you're searching for information on your favorite exchange-traded funds, or maybe your next favorite ETFs, well, go to VettaFi.com, where they've got a full suite of tools that is going to help you make sure that yours are staying your favorites. They're on X at Vetta_Fi. Todd Rosenbluth, their head of research, my guest, he's on X as well at Todd Rosenbluth. The ETF of the week is here for you every Thursday, whether Todd and I are here or not. So make sure you follow along so that you never miss an episode. We're on your favorite podcast app, and we'll be back next week with another ETF for you to consider. Until then, happy investing, everybody.